A 50% dividend yield would mean that in theory, half of your investment will be returned in the form of dividends within the first year. So for example, if an investor was to invest $100 and the stock or ETF had a 50% dividend yield, by the end of year number 1, they would be paid around $50 in dividends. Now this sounds too good to be true, doesn't it? And there absolutely has got to be a catch, because if this was the case, then why wouldn't everyone do it? Well, in this video, we're going to go over a potential method that dividend investors would be able to do this, and an exact strategy how. Now, before we get into it, make sure to please drop a like on the video and subscribe for more future content like this. Now, the investment that's currently offering around a 50% dividend or distribution rate is none other than ticker symbol TSLY, or the Yield Max Tesla Option Income Strategy ETF. But just a quick overview, the Yield Max Option Income Strategy ETF, known as TSLY or TSLY, is an actively managed fund that seeks to generate monthly income by selling or writing covered call options on Tesla. TSLY pursues a strategy that aims to harvest compelling yields while retaining cap participation in the price gains of Tesla. Now, even though TSLY does offer massive dividends, at least it has over the last few months, because keep in mind this ETF has not even been around all that long, it's been around more or less a year. This ETF also has some reasons why investors should be wary and maybe even scared. Looking at the ETF price performance on the max time frame, this ETF is down 35.44%, which in theory means that if an investor was to invest around $100 when this ETF came out, they would only have around $65 left plus whatever it paid out in dividends. But lucky for investors, this ETF has paid out a massive amount of dividends, at least historically speaking. This ETF has paid anywhere from $1 on a monthly basis, down to as low as 44 cents, and just as of recently around 58 cents per share per month. But what's also pretty crazy about this ETF is that if you were to even take into consideration the price decay, as far as how much the ETF price has lost over the last year or so, if you add up all the dividends and add them together, looking at the total return, this ETF is up 74.86% just year to date. Now, of course, there's no way to actually know exactly how this ETF is going to perform in the future and what future dividends it's going to be giving to investors. But that being said, just based off of the previous performance, this ETF is actually doing pretty well. It's stabilizing in price, at least as of recently, and even the most recent lower dividend payouts on a monthly basis still make for a very gigantic yield when it's all said and done. So just like the title of the video says, investors in theory might actually be able to utilize the snowball method and build a massive portfolio off of just a tiny amount of money. Now, heading over to the dividend calculator, one thing to keep in mind, these numbers are just based off of current numbers. These numbers can change, they likely will. They can go way down, they can go way up. Just want to get that out of the way. But if we were to type in $1,000 as starting principal, $1,000 invested into TSLY with a $100 per year contribution, meaning that you're only going to buy $100 more of TSLY yearly. The distribution frequency is monthly, DRIP is turned on. So dividend reinvestment is going to be turned on for this experiment, which means that in theory, every single dividend that this ETF pays, and keep in mind they've been massive, they're going to be reinvested into more shares of TSLY. And then those shares are going to pay more dividends, and then those dividends are going to buy more shares. And that's exactly how the snowball compounding effect takes place. As far as initial dividend yield, we're going to go off of 49%, which again is absolutely insane. And like I said a second ago, there's a very good chance that this ETF is not necessarily going to continue to always pay out as high as it has historically. So keep in mind, we're just going off of numbers that we have. Now, the expected annual dividend amount increase, I'm going to go with 0%. The expected annual share price appreciation, 0%. Because most likely, in my opinion, this ETF will probably keep going lower in price, at least if you were to ask me. Now, after 30 years invested, this is what we get. So year number 1, the $1,000 starting and the $100 of contribution. This ETF in theory would return around $616 per year in dividends. I know it's absolutely insane. Year number 2, if all the numbers were to continue, and of course you were to reinvest all the dividends back into more shares of TSLY, and again in theory if TSLY was to stay at the exact same numbers, keep in mind this is all just in theory, $1,624 of principal and over $1,000 per year in dividends. By year number 5, $6,200 of principal and $3,800 per year in dividends. Now, what's so crazy about this experiment is that the principal and annual dividend amount is actually so close, because in reality, that's actually what's happening with TSLY. Investors, as of recently at least, were buying into shares of it and receiving massive dividend payouts, which again has just been insane. By year number 10, in theory, $52,000 worth of TSLY and $32,000 per year in dividends. Now, what's so crazy about this experiment is that because the dividend yield is so high starting off and all dividends are being reinvested, the numbers just get bigger and bigger and bigger. So much so by year number 20, this snowball could be over $3.5 million and over $2 million in dividends. Now this early, it's really hard to say what's going to happen with TSLY and all these different yield max ETFs, and of course their future distribution rates. Because I'll be honest, as of right now, these distribution rates are very tempting to get some money into the market, get some money into these yield max ETFs, and get the money to work. And of course, do whatever you want to do with your own money, but for me personally, I would always utilize just a relatively small amount of money, a small portion of my portfolio into this sort of investment because it's just too unknown of what's going to happen in the future. But that being said, there might be more risk, which also means there could be more reward. But when it comes to the yield max ETFs, have you personally been buying any of them? And if so, which tickers have you been buying as of recently? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.